why I am buying this undervalued artificial intelligence AI stock right now. AI could win the inflation fight for the Fed. Artificial intelligence could cause 300 million full-time workers. Globally, they will lose their jobs and be unemployed. In a snap of a finger, unemployment rate could go through the roof. Here is how inflation could go bye-bye. Recession will say hello, as Germany just fell into a recession as of today. And TLT will go to the moon as we are going back to zero interest rate. High beta stocks will rocket all the way to Mars. The good old times. According to investment bank Goldman Sachs, AI could replace a quarter of work tasks in the USA and Europe, but also meaning new jobs and productivity boom. It could eventually increase the total annual value of goods and services produced globally by 7%. Generative AI, able to create content indistinguishable from human work, is a major advancement. In this video, I will share with you what undervalued AI stock that I bought today, why I am bullish on this stock, and why it is so undervalued. Why I think the risk and reward is very flattering at this point. Similar to Meta, it has an 80% gross margin. I will explain it all right after this.
How you like that? How you like that? Nah. Look at you, now look at me. Look at you.
Welcome back everyone to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here. And you know what to do, and push my button if you like what you see in today's video. Because you're already a success, it is done when you join the Audacious Money Witch Club. This video is brought to you by my new website. If you're a good boy, go to audaciousmoneywitch.square.site to add more meaning into your life. If you play your cards right and completely submit, like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get into the bookstore. You want it to be real. You want it to be true. You want to join the Audacious Money Witch Club, don't you? Recent events might suggest a financial collapse is imminent. But history suggests this could be a positive year for the US stock market. This is because markets surprise us when we least expect them to, like Nvidia today. You may have noticed that the financial world has been under constant pressure recently, driven by events that lead us to believe that everything could collapse at any moment. And investors are still cautious after a dismal 2022. However, if you look closely, all the major markets have rallied since the low of October 2022 and are in positive territory. This is at least true for equities. Currently, in my view, portfolios need more support from bonds. This may continue to be the case until central banks stop putting upward pressure on yields. And that could possibly happen in the last quarter of 2023. But in the case of equities, this will be a positive year. Don't take my word for it, as this is what history suggests. When the stock market closed higher than 5% in January, it resulted in a positive year every single time. The year has always been positive if there were 18 consecutive days above the 200-day moving average in February, following a 20% drop in the previous year. In March, if the first quarter showed positive growth, The entire year has been positive in every case. If the stock market performance for the first 100 days surpasses 8% in May, it has always led to a positive year. In one side, we have a positive statistics with 5 months of positive performance in 2023. On the other side, news, forecasts, and looming catastrophes suggest an imminent market collapse. In the markets, anything can happen. And instead of relying on predictions, I find it more reliable and comforting to follow the numbers and statistics based on over 100 years of data. Even the recent earnings season has shown greater resilience than anticipated. The speculative side, valuations, appears to be regaining what was lost in 2022. As depicted by the purple area in the S&P 500 chart here. So, as always, it's not that I'm always pessimistic, but I am optimistic in the long term because the US stock market history suggests so. But in the short term, it's important to remember that markets behave like a pendulum, swinging from one extreme to another, just like the investor's mood. I will be concerned when everyone starts rushing back into the market. And the local dancer tells me she's investing in stocks or cryptocurrencies like Bitcoin. Or when people start bombarding me with questions about the best stocks to invest in right now, as they did in 2021. Since the release of powerful AI tools, ChatGPT and Google's Bard, discussions about whether robots will replace humans have grown. And studies show 18% of work globally could be replaced with more advanced economies heavily impacted than emerging markets. Generative AI, a form of artificial intelligence capable of creating text or other content in response to user prompts, has quickly gained popularity following the launch of ChatGPT. People have used it to write college-level essays and generate code. The stock was a Silicon Valley startup with a vision to transform how people collaborate into a global brand servicing a majority of the Fortune 500. Here is what the CEO said about 2023. Make no mistake, we are navigating a challenging macroeconomic and geopolitical environment. At the same time, we are also embarking upon a generational platform shift with an advent of generative AI and large language models. Amid this relentless change, we are working hard to solidify our position as an indispensable all-weather partner for businesses of all sizes, offering one platform, delivering limitless human connection. This company, I am sure most of you have used its product already. I have said I was not interested to buy this stock before, but after I did more research, I think it could be a great opportunity. Michael Burry just spent $7 million on this $63 stock today. Kathy Wood said this one could be worth $2,000 a share. Can you guess which stock I bought? Yes, it's Zoom stock. Ticker symbol ZM. According to ARK's research and model, Zoom's share price could approach $1,500, compounding at a 76 annual growth rate in 2026. In January 2022, Slack estimated that approximately 58% and 12% of all global knowledge workers worked in hybrid or fully remote arrangements. Respectively, while 30% worked in a business office outside of the home every single day. Although a perceived decline in the severity of lockdown influenced many firms to reopen offices and reinstate 100% in office mandates, which lowered the penetration of hybrid remote working models to 66%. We believe that knowledge worker backlash and talent shortages will compel employers to adapt more flexible arrangements. Slack reports that employees forced to return to the office full-time experienced the steepest declines in work-life balance and overall satisfaction compared to their hybrid remote peers, suggesting that in-office mandates will lead to high rates of attrition. We believe current pivots back to in-office mandates could be part of a trial and error process for employers that will increase the percentage of workers in hybrid remote working models during the next 5 years. So top-line growth rate is not an issue. According to SimilarWeb, Zoom's market share was 48% in 2021. That said, we expect the company to remain a dominant provider of cloud-based communications during the next 5 years. Zoom is leverage AI to drive impact. The event of generative AI and large language models has arrived, and we want to empower our customers to work smarter with these transformational tools. AI is nothing new for us. 2 of our largest acquisitions were AI companies, and AI has long supported our virtual background. Noise suppression, gesture recognition, and transcription and translation technologies. At the end of fiscal year 2023, we launched Zoom Virtual Agent, an intelligent conversational AI and chatbot solution for the contact center. Generative AI will open up endless possibilities, and we are well positioned to capitalize on this generational shift and become an AI-enabled collaboration platform. We are adopting a federated AI strategy that combines our perpetuary AI models from leading AI companies like OpenAI. Zoom has the most solid balance sheet in all of the mid-cap AI companies today. It has $5.6 billion in cash and no debt. Cash loaded to the sky, they are holding a lot of 1-month T-bill, giving them 5.5% yield every year, which is close to $300 million of free cash dividend a year. Another reason why I bought this stock is because another Corona beer is brewing in China. This is definitely a pure Corona play, if you know what I mean. Here is my book, Treasures Within Our Heart. You are such a good boy for watching my video right till the end. Bye.